Very good, very good evening, everyone. How are you all? Everyone fine. So today we'll start the revision for amalgamation chapter for CA Inter Advanced Accounting, Accounting Standard 14. Are you all ready? Okay, sir. So for amalgamation, we all know that in amalgamation chapter actually there are three form of restructuring which are discussed. One is amalgamation, means amalgamation of company include amalgamation. Second is absorption, and third is external reconstruction. However, as per definition they are different, but for accounting treatment all are same. Means from accounting treatment point of view, AS40 will be applicable in the books of transferee company. Now what is transferee, what is transfer, we'll discuss. First let me explain you what actually is the difference between amalgamation, absorption and external reconstruction, so that from the question you can understand it is a question of amalgamation, it is a question of absorption, it is a question of external reconstruction. So when I say amalgamation, so when two or more than two company join together to form a new company, then it is known as amalgamation, correct? So in that the two or more than company which are joined are actually liquidated and a new company is formed to take over the business of the liquidating company. This process is known as amalgamation, understood? So in case of amalgamation, what happened? Two or more than two company are liquidated and their business are taken over by a new company. A new company will be formed to take over the business of that liquidating company. This process is known as amalgamation. In case of absorption, what happened? What happened in absorption? Ki one or more than one company, one or more than existing company, one or more than one company are actually liquidated and their business are taken over by an existing company. Their business is actually absorbed by an existing company. This process is known as absorption company. So you can understand ki in case of amalgamation, what happened? A new company is formed to take over the business of two or more than two company. In case of absorption, what happened? A existing company take over the business of one or more than one existing company, understood? In case of external reconstruction, what happened? There is only one company which is liquidated. There is only one company which is liquidated and their business is taken over by a new company. A new company is formed to take over the business of that one company which is liquidated. So this is known as external reconstruction. So you can see in all the common point is what? There are some company which is liquidated and there will be one company which can be either new company or existing company which will take the business of liquidating company, understood? So the company which is liquidated in this chapter will be known as transferor company, and the company which acquires the business of liquidating company will be known as transferee company. So the objective of this chapter is to understand the accounting treatment in the books of transferor company and transferee company. That is the objective of this chapter, understood? So basic difference between amalgamation, absorption and external reconstruction, I hope you have understood, but these differences are not important from exam point of view. This difference is only to understand which type the question is for amalgamation, absorption and external reconstruction. However, the accounting treatment will remain same because the accounting treatment we need to follow is for transfer and transferee company. Got this point? Yes sir. So this you can read. Now the objective, the scope of this chapter is what? To understand how to calculate purchase consideration. So of course, can I say in this chapter purchase consideration will be paid by transferee company to the shareholders of transfer company. So how to calculate purchase consideration, that become one important concept. Then we need to understand accounting treatment in the books of transfer company. What are the accounting treatment that we are supposed to do in the books of company which is actually liquidated? Means can is the company which is liquidated, we need to close the books of account. So how to close the books of account of any company which is liquidated, that we need to understand, correct? Then accounting treatment in the books of transferee company, this is actually as per AS14. So as per AS14, what will be the accounting treatment in the books of transferee company, that we need to understand. So whatever we do accounting treatment in the books of transfer company for closing the books of account, that is not as per AS14, that is as per generally acceptable accounting practice, understood? So AS14 deals with only the books of transferee company, it does not deals with the books of transfer company, correct? Now calculation of PC, can you say PC is nothing but amount of consideration which is paid by transferee company to the shareholders of transfer company. So any amount which is paid or payable, any amount which is paid or payable to whom? To the shareholders of transfer company is known as purchase consideration. I repeat what I have said. Whatever amount is payable to the shareholders means any amount which is payable to the creditor or debenture holders of transfer company will not be a part of PC. Correct? So PC for the amalgamation means aggregate of the shares or any other security issued and the payment made in the form of cash or any other asset by the transfer company to whom? To the shareholders. To the shareholders of transfer company. Okay, shareholders will include both equity shareholders and preference shareholders. So any amount payable, any amount paid or payable either in the form of cash or in the form of any other asset, in the form of equity shares, in the form of debentures of transfer company to the shareholders of transfer company will be the amount of PC. Now of course, how to calculate PC? How to calculate PC? For calculation of PC, there are two methods prescribed as per the information given in the question. There are two methods from examination point of view. We can say there are two methods. One is known as net payment to shareholders, means net payment method. One is known as net asset taken over basis, means net asset method. We popularly call them net payment method and net asset method. Just try to understand one point. Just try to understand one point. Key. If the payment information has been given, always PC is calculated by net payment method. If the payment information has been given, means PC is nothing but calculated by using net payment method. But sometimes what happens from examination point of view, the amount of payment will not be given directly. In that case, we'll apply net asset method. Means net asset method will be used only when the net payment information is not given in the question. For example, in a question they have given information about net payment as well. They have given information about payment as well as net asset taken over. Then you need to apply which method to calculate PC? Net payment method will be preferred over what? Net asset method. Understood this point? Have you understood this point? I hope you are understanding. So attention, what this is very special point. Normally students think that net asset method is more commonly used to calculate PC. That is wrong. We should give more preference to net payment method than net asset method. Normally what happens, out of 10 questions, 8 questions in ICS study material is calculated by using net asset method. So students think that net asset method is more common than net payment method, but it is not correct. Once again I repeat, PC is calculated by using which method? PC is calculated by using net. PC is calculated by using, first preference will be given to net payment method. Correct? If the net payment information is not given, then we'll use net asset method. Now let us understand how to use net payment method and then when to use net asset method. This is the more important point. Can you see in this question, if you wrongly calculate PC, then entire accounting treatment, whatever you are doing in the books of transfer company and transfer company will be wrong. So it means you need to carefully calculate the amount of PC. Normally what happens in exam, PC is only wrongly created. PC is only wrongly calculated. And can you say PC is wrongly calculated not because you don't know, it might be possible that you have not read the question carefully and because of that reason you are wrongly calculating the PC. So I will say be thoda sa calm, be thoda sa, I will say have patience in calculating the amount of PC. Once you have calculated correct PC, then you can do the entire accounting treatment, because entire accounting treatment will be very simple. Chalega? Yes sir. I hope you have understood about net payment method. So net payment method means what? Payment to equity shareholders as well as payment to preference shareholders. So payment to amount payable to equity shareholders and preference shareholders. Can I say it can be in the form of equity shares of transfer company. It can be in the form of preference shares of transfer company. It can be in the form of debentures of transfer company. It can be in cash. Can you see this will be as per information given the question? Means all the information will be given the question. Only you need to calculate what is the amount of equity shares, what is the amount of preference shares, what is the amount of debentures, and what is the amount of cash which is paid or payable to equity shareholders and preference shareholders of transfer company. I hope you have understood. The sum total of these will be the amount of PC. The sum total of this will be the amount of PC. Once again, any amount which is payable to the creditor or debenture holders of transfer company it will not be included in PC. Understood? Any amount which is payable, once again repeat with me, any amount payable to debenture holders or creditor of transfer company will not be included in the amount of PC. Only amount payable to whom? Equity shareholders and preference shareholders will be part of PC. Any amount of liquidation expense paid, If suppose any liquidation expense of transfer company is paid by transfer company, that is also not a part of PC, because that liquidation expense whatever has been paid by transfer company to transfer company is actually not a payment to shareholders, is actually not a payment to shareholders. So can you repeat with me, what is the formula? Formula is what? Amount payable to equity shareholders or and preference shareholders of transfer company, either in the form of equity shares of transfer company, or in the form of preference shares of transferring company, or in the form of debentures of transferring company, or in cash, the total will become what? PC. Now the only point is that how to calculate this in the equity shares or preference shares of transferring company. This will be as per the information given the question. But to explain you what will be the way to find out the amount of equity shares or amount of preference shares of transferring company which is allotted to what? Equity shareholders and preference shareholders of transfer company. For that, just try to understand one thing. So can you say, whenever we use net payment method, whenever we use net payment method, the first thing we need to find out what is the amount of equity shares or preference shares which are allotted to, amount of equity shares or preference shares which are allotted to whom? To the equity shareholders or preference shareholders of transfer company. For that, we want number of shares to be issued by transfer company multiplied by issue price of transfer company. Means how many shares issued by transfer company? How many shares issued by transfer company to the shareholders of transfer company? Correct. Multiply by issue price of transfer company. Can I say, normally sometimes these two direct information may be given the question. If the direct information has been given the question, thank you very much. So actually to find out the amount of equity shares or amount of preference shares of transfer company which is allotted to the shareholders of transfer company, we want two information. First is number of shares to be issued by transfer company multiply by issue price of transfer company. If these two are given, thank you very much. But sometime what is not given, the number of shares to be issued by transfer company is not given directly. Then we need to calculate it by using the swap ratio or exchange ratio. So in question they will give you some exchange ratio or swap ratio. So if that is given, how to calculate this will be number of shares of transfer company, number of shares of transfer company multiplied by swap ratio, understood? So number of shares of transfer company multiplied by swap ratio, understood? Now sometime what happens, swap ratio is directly not given the question. If the swap ratio is not directly given the question, then we calculate swap ratio by using the given formula. So if swap ratio is not given the question directly in terms of number, then we'll calculate swap ratio by using the formula. The formula will be fair value of shares of transfer company divided by fair value. This is not face value. Fair value of shares of transfer company divided by fair value of shares of transfer company. Correct? So normally they will give this information. They will give you the fair value of shares of transfer company divided by fair value of shares of transfer company. Correct? Now fair value is nothing but market price of shares or intrinsic value. They might give you market price or intrinsic value. Understood? So fair value can be market price of shares or intrinsic value of shares. Either of these will be given in the question. Understood this much? Correct. Now, so what we have said once again, for net payment method, what we want, can you update me? For net payment method, we want number of shares to be issued by transfer company multiplied by issue price. Number of shares to be issued by transfer company given the question, thank you very much. If not given the question, we'll calculate it by using the swap ratio that will be given the question. So if the swap ratio is given the question, what is the formula? Number of shares of transfer company multiplied by swap ratio. Number of shares of transfer company multiplied by swap ratio. If swap ratio is directly given the question, thank you very much. If not given the question, so just identify whether the fair value of shares of the company are given. If given, then we can calculate swap ratio by using the fair value of shares. So that will be fair value of shares of transfer company divided by fair value of shares of transfer company. Fair value is nothing but market price of shares or intrinsic value of shares. This much have you understood? Yes sir. Sometime what happen, ki fair value is not given and the question says that equity shares will be issued on the basis of intrinsic value. In that case, we need to calculate intrinsic value. So if the fair value of shares is not given and question is specify you to calculate intrinsic value, then we'll calculate intrinsic value of shares. So intrinsic value is nothing but intrinsic value can be calculated. How to calculate intrinsic value, that I need to inform you. Correct? So if the fair value of shares is not given, then calculate intrinsic value of shares. If specified in the question. Means if the question has informed you to calculate, what intrinsic value. Understood? Yes sir, correct. Means can I, to sum up, can I say in this way? Once again I will just inform you. So whenever you are calculating payment to equity shareholders or preference shareholders of transferor company, correct, in the form of either equity shares or preference shares, correct. So equity shares in the form of equity shares of transferee company. So what we want? First we want number of shares to be issued multiplied by issue price of transferee company. Transferee, TW means transferee company, correct. Understood? This is the formula. Number of shares to be issued is not given. Suppose it is not given directly, then why, how to calculate this? Batao. So this will be what? This will be number of shares of transferor company multiplied by swap ratio. Swap ratio I hope you understood कि for 2 equity shares 3 equity shares will be issued, like that swap ratio will be given, correct. So it will multiply by swap ratio or we call it exchange ratio. चलेगा? Either we will call it swap ratio or exchange ratio. 1 minute. So swap ratio. Now sometime what happens, swap ratio is not given directly. So in that case swap ratio will be equal to fair value of shares of transferor company divided by what? Fair value of shares of transferee company. Fair value, not face value, it is fair value. Now fair value can be either, this fair value can be either market price of shares, it can be either market price of shares or intrinsic value of shares. Either market price of shares or intrinsic value of shares, correct. Now sometime intrinsic value of or fair value is not given the question, then question will ask you to calculate intrinsic value. So likho, if question is specify, then calculate intrinsic value. Now how to calculate intrinsic value, that I need to explain. Chalega? This much you understood. Now issue price is normally given the question ki add rupees this, include add premium or whatever, that will be given the question. But if not given the question and you are applying net payment method, so if the question is silent, then you will give first preference. If the issue price is not given, then take fair value of shares. Fair value of shares can be, once again, it can be either market price of shares or intrinsic value of shares, correct. If that is not given, then we'll assume that shares are issued at par. If that is not given, then we'll assume shares are issued at par. Par means what? Face value at par, correct. That assumption will take. So this is the first preference when the issue price is not given. It is the second preference when the issue price is not given. This is the overall understanding of the calculation of PC. But normally I have seen that in ICI CA inter exam, normally they will give swap ratio. If they have given swap ratio, can I say it becomes super easy. Understood? If can I say net payment method cannot be applied, if the net payment method cannot be applied, then we'll go for what? Net asset method. Means can I say if all these informations are not given, means can I say in this way, if the swap ratio is not given, yeah, we'll say number of share to be issued is not given, then swap ratio is also not given, then fair value of shares is also not given, and they have not asked you to calculate intrinsic value, it means we do not have any other option. We have only one option to use net asset method. Then we'll use net asset method, correct? So net asset method will be used only when the net payment method can't be applied. It means in the question what are not given? Number of share to be issued are not given. Now swap price is also not given. Fair value of shares is also not given, and the question has not asked you to calculate intrinsic value. It means we have only one option to calculate PC by using net asset method. To calculate PC by using net asset method. Now when I am saying net asset method, it is very simple. Total asset taken over at agreed value or fair value. Total asset taken over at agreed value or fair value minus what? Total liability taken over at agreed value or payable value. This become total purchase consideration. Can this purchase consideration belong to both equity shareholders and preference shareholders? Equity shareholders and preference shareholders. So it means you need to find out after calculating total PC by net asset method कि how much belong to preference shareholders and how much belong to equity shareholders. Normally they will give either of these, means either they will give you the payment information about preference shareholders or they will give you payment information about equity shareholders, because if they have given both, then so you are using what? Net payment method. So either they will give you payment information about preference shareholders or they will give you payment information about equity shareholders. So can you say from this total PC, if you deduct payment to preference shareholders, it means balance is payable to equity shareholders, or vice versa. From total PC, if you deduct payment to equity shareholders, then balance will be payment to preference shareholders. But normally in exam they will give you payment to preference shareholders and balance will be payment to equity shareholders when you are using net payment method, correct? Now only I need to explain you how to calculate intrinsic value. So intrinsic value is calculated how, that I need to explain. Chalega? Understood this point? So if I explain you how to calculate intrinsic value, then you will be able to understand. Correct. So intrinsic value will be calculated by using this formula. Formula is what? You know, take all asset at fair value. All asset at fair value. All asset. Correct. Now you know what are asset. All asset at fair value minus all liability at fair value. Fair value means current value, agreed value. So fair value is nothing but current value, agreed value. Correct. In amalgamation chapter normally we call it agreed value. Chalega. So fair value when I am saying it means current value or agreed value. Okay. So all asset at fair value minus all liability at fair value. So this will be net asset, total net asset at fair value. Okay, this net asset belong to preference shareholders as well as equity shareholders, but intrinsic value normally we calculate for equity shares, not for preference shares. So from this will minus amount payable to preference shareholders as per the working note of PC, means how much you are paying to preference shareholder, that will be given the question. So amount payable to preference shareholder, not book value, that is amount, I am saying less amount payable to preference shareholder, that you deduct amount payable to preference shareholder, you deduct. This is the net asset available to equity shareholders divided by number of equity shares. So this will become intrinsic value of equity share. This will become intrinsic value per equity shares. So what is the formula? Formula batao. All asset at fair value. All asset at fair value minus all liability at fair value. This will be net asset available to total shareholders. From this you will minus what? Payment, yeah, amount payable to preference shareholders. Then after deducting amount payable to preference shareholders, you will get amount available, yeah, net asset available to equity shareholders divided by number of equity shares, you will get intrinsic value per equity shares. So this is the way to find out intrinsic value per equity shares. If they specify in the question to calculate intrinsic value, then only will calculate intrinsic value, otherwise will not calculate intrinsic value. Chalega. Now there are some important points which you need to keep in your mind while calculating intrinsic value. When I say all asset, so all asset means what? All asset means including goodwill, including cash and cash equivalent, means all asset need to be taken. So when I am saying fair value, asset will include goodwill, other intangible asset also. It does not mean the goodwill we will not take, because all asset is at what? Fair value. Correct? If the goodwill has no value, then goodwill will not come. So all asset at fair value. So all asset will include goodwill and other intangible asset if any. Correct? Can I say asset will also include cash and cash equivalent, but cash and cash equivalent will always come at carrying amount because there is no fair value for cash and cash equivalent. So asset will always include cash and cash equivalent. Okay, liability will include all provisions. Provisions are liability. So liability will include all provision as well as amount payable to debenture holders. The claims of debenture holders. The liability will include provisions as well as claims of debenture holders. Of course, preference holders are not liability. Therefore, we deduct it separately. So liability will include all provisions and the claims of debenture holders. Claims of debenture holders means amount payable to debenture holders. Correct? Can I say reserve and surplus are not liability, therefore that will not be deducted. So reserve and surplus are not liability, be careful. Provisions are liability, but reserve and surplus are not liability. So reserve and surplus are not liability and therefore will not be considered for calculation of intrinsic value. These are some important points I hope you have understood. Now already I have said that fair value means either realizable value or current value or agreed value. Correct now? So sometimes they will say current value, sometimes they will say agreed value, sometimes they will say realizable value. All are same. So fair value of asset can be market value or realizable value or agreed value. Correct? So don't be confused. Fair value can be market value, realizable value or agreed value. Similarly, fair value liability can be payable value or agreed value. Understood? If the fair value information is not given, for example, for certain assets and liability they have not given the fair value information, then we'll assume that fair value is equal to their book value. Then we'll assume what fair value is equal to book value. So if the fair value of assets and liability are not given, then we'll assume that fair value is equal to their book value. That is our general assumption. This become our general assumption. So I hope you understood how to calculate intrinsic value. Correct? So what is the use of intrinsic value? I hope you understood. So whenever swap ratio is not given, then swap ratio can be calculated by using intrinsic value. That is nothing but intrinsic value of transfer company divided by intrinsic value of transferee company. If the question is specified, then we'll calculate intrinsic value if the intrinsic value is not given in the question. Okay, sir. This much you understood. I hope you understood. Net payment method you understood. Now coming to net asset method, one thing we have understood that PC will be calculated by net asset method only when specified in the question. Only when specified in the question or when these are not given. What are not given? Number of shares to be issued is not given. Swap ratio is not given. Fair value of shares not given, and the question has not demanded to calculate intrinsic value. It means we do not have any other option. We have only one option to calculate PC, that is net asset method. So how to use net asset method? PC will be calculated as and by using net asset method. We'll take asset taken over at fair value, only taken over, not all. So asset taken over at fair value minus liability taken over at fair value, only taken over. Means when you are calculating intrinsic value, then you are taking all asset, all liability. But when you are calculating PC by using net asset method, so of course PC is only for the assets and liability which are taken over. Correct? So only those assets which are taken over at fair value, only those liability which are taken over at fair value, this become total PC. Now from this, if you deduct payment to preference shareholders as per the information given in the question, the balance is the amount payable to equity shareholders. So in this way we find out what is the amount payable to preference shareholders or what is the amount payable to equity shareholders. Understood? This is about what? This is about calculation of PC. Of course we'll calculate PC in each question whatever we'll take today after entire discussion. So PC calculation will do as per the question. In every question first point will be calculation of PC, but overall understanding came how to calculate PC. Now let us come to the second point of this chapter, that is accounting treatment to close the books of transfer company. Means how to close the books of transfer company. Can I say, of course transfer company is a liquidating company, so we need to close the books of transfer company. So there are some steps, that step we need to follow. If you follow this step, you will never do mistake. The first step is what? Close all item of balance sheet by transferring them to respective account. Normally I call it kill the balance sheet. Kill the balance sheet of which company? Transferor company. Means all the item of balance sheet need to be closed by transfer respective account. So we'll transfer all asset of transfer company to realization account at book value. And can I say we'll follow this first step only at book value because we are closing all the accounts and all the accounts will be closed at book value only. Correct? Yes sir. So first is transfer all asset to realization account. Realization account is nothing but a nominal account to calculate gain or loss on sale or settlement of liability, sale of asset or settlement of liability. It is nominal account, means we'll calculate gain or loss on on sale of asset or settlement of liability. Understood? Yes sir. So realization account, what will be journal entry to close asset account? Realization account debit to asset account. Realization account debit to all asset account at book value. But be careful about certain point. First point is that if the cash and bank is taken over, so now if the cash and bank is taken over by transferee company, then cash and bank account will be closed by transfer to realization account. But if the cash and bank is not taken over by transferee company, then can is the cash and bank will not be transferred to realization account, because we need to open a separate cash and bank account which will be used for the payment of liability. Understood? So if the cash and bank is taken over by transferee company, close cash and bank account by transfer to realization account. But if cash and bank is not taken over by transferee company, then we'll open a separate cash and bank account which will be used for any payment of expense or any payment of liability. Understood? The first point, have you understood? Second, any other asset or liability. Any other asset or liability means apart from cash and bank balance. Any other asset or liability, even though not taken over by transferee company, will be transferred to realization account. Understood? So any asset, any liability other than cash and bank will be always transferred to realization account, even though it is not taken over by transferee company. Correct? So other assets and liability, even if not taken over by transferee company, should be transferred to realization account. This point, have you understood? Have you understood this point? Bolo. Have you understood this point? Yes sir. The next point, any intangible asset, whether it is goodwill, patent, trademark, if it is appearing in the balance sheet, that will be also closed by transfer realization account. Normally students think that goodwill account will not be closed. Any asset, goodwill is also an asset, intangible asset also an asset. So any intangible assets such as goodwill, patent, trademark will be also closed by transfer to realization account. But there is one special account known as fictitious asset account. I will say fictitious asset account are those expenditure which are not yet written up to PL account, means that are actually an accumulated loss. So that are not an asset. So any fictitious asset is actually not an asset, that is not a real asset, that are accumulated losses. So that is a loss, and loss will not be transferred to realization account. Loss will be closed by transfer to equity shareholders account. So any fictitious asset will not be transferred to realization account, because that is a loss, and all the reserve and surplus and accumulated loss is directly transferred to equity shareholders account. Understood? So any fictitious assets such as preliminary expenses not yet written off, discount on issue of debentures or shares not yet written off, underwriting commission which are not yet written off, are not transferred to realization account. Such fictitious asset will be closed by transfer to equity shareholders account. Understood? Have you understood? Correct. Now sometime what happened, there may be some debtor with provision for doubtful debt. Correct. Now suppose you have a debtor, means I am explaining all the point so that you can understand with all steps what need to be done in exam question. Correct. So suppose we have a debtor with a provision for doubtful debt 10,000. Now can you see these are two separate accounts, and we are here to close each account. Debtor will be closed by transfer to realization account at gross amount, and provision for doubtful debt account will be also closed by transfer to realization account at 10,000. So whenever an asset has a provision account, so asset will be closed by transfer to realization account at gross amount. So an asset against which provision has been created should be transferred to realization account at its gross figure, not at its net figure. Example, debtor. So debtor will be closed by transfer to realization account at rupees 1 lakh, and provision will be closed by transfer to realization account at 10,000. Understood? Correct. So of course debtor will pass realization account debit to debtor, for provision will say provision account debit to realization account. Understood? Correct. Now whenever we are doing transfer we are doing at book value, not at agreed value. So whatever agreed value information is given in the question, that is not at all relevant for the first step. Step number 1 is done at book value, not at agreed value. So normally students are confused with the agreed value or the fair value given in the question. So for this purpose, agreed value of asset at which they are taken over by transfer company are not at all relevant. Why? Because this journal entry we are doing at book value. Understood? So step number 1, point number A right now I have done. Step number 1, point number A. Now point number B is what? Transfer of all liability to realization account at book value. transfer of all liability to realization account at book value. Correct? Yes, sir. So journal entry will be what? Liability account debit to realization account. Realization account will be created. Liability account will be closed by transfer to realization account. Chalega. So attention. What are the attention? Once again, what are the attention? Key item in the nature of provision, such as provision for tax or provision for employee provident fund. All provisions are liability, therefore that will be closed by transfer to realization account. Correct? So for example, provision for tax, employee provident fund is also a provisional account. Pension fund, gratuity fund, provision for doubtful debt, provision for depreciation should be transferred to realization account. Correct? So in the item in the nature of provision, the provisions will be closed by transfer to realization account. It can be in the name of provision for tax or retirement gratuity fund or pension fund or gratuity fund, because these are payable to employee. So they are what? Provision. So this should be closed by transfer to realization account. Now contingent liability. Can I say contingent liability is actually not recorded? This is an off balance sheet item. Off balance sheet item is that is not recorded in balance sheet. So right now we are killing the balance sheet which are recorded in balance sheet. So contingent liability is not recorded only. The question of closing will not arise. So contingent liability is an unrecorded liability, hence question of closing them will never arise. Therefore they should not be transferred to realization account. Be careful about contingent liability. Ignore contingent liability for step number 1. Correct? Yes, sir. For this purpose, once again, agreed value of liability given is not at all relevant. Only we need to close at what? Book value. So liability you have understood? Yes, sir. Then third step is what? Transfer preference share capital. Means step number 1 ka point number C is what? Transfer preference share capital to preference shareholders account at book value. So what journal entry will do? Preference share capital account debit to preference shareholders account. So preference share capital will be transferred to preference shareholders account because we need to pay to preference shareholders. Similarly, transfer equity share capital, all the reserve and surplus to equity shareholders account at book value. So can I say equity share capital and reserve and surplus belong to equity shareholders? So we close that account by transfer to equity shareholders account. Means equity share capital account, reserve account, profit and loss account to what? Equity shareholders account. Similarly, if there is any fictitious asset means accumulated losses, that will be closed by transfer to which account? Equity shareholders account. So what journal entry will do? Batao, what journal entry will do? Equity shareholders account debit to fictitious asset account. Understood? Correct. One thing we have understood, the reserve will include all the reserve including statutory reserve. Means any reserve of whatever nature. It can be general reserve, it can be statutory reserve, it can be securities premium. All the reserve and surplus will be closed by transfer to equity shareholders account. So reserve will include all reserve including securities premium and statutory reserve. But sometime what happen? Item in the nature of reserve such as workmen compensation fund, investment fluctuation fund, these are actually created for some special purpose. Correct now? And suppose question has specified some specific liability against that reserve. Correct? For example, they have given workmen compensation reserve 1 lakh and they have said that expected liability for this 20,000. So out of this 1 lakh, 20,000 is a liability that is transferred to what? Realization account, and the surplus balance, that is 80,000, will be transferred to what? Equity shareholders account. To be careful about this. So item in the nature of reserve such as workmen compensation fund, investment fluctuation fund should be transferred to equity shareholders account, but that portion of any reserve or fund which represent a liability expected to arise in future should be transferred to realization account. Once again I said, if suppose they have given workmen compensation reserve and they say the expected liability to pay worker is 20,000, so 20,000 will be transferred to realization account and 80,000 will be transferred to equity shareholders account. Chalega. This is what our step number 1. Step number 1 completed. So what is step number 1? Close all item of balance sheet at book value by transferring it to respective account. So all asset will be transferred to realization account, all liability will be transferred to realization account, equity share capital will be transferred to equity shareholders account, reserve and surplus will be transferred to equity shareholders account, preference shareholders account will be transferred to preference share capital account will be transferred to preference shareholders account, and fictitious asset will be transferred to equity shareholders account. This is the nut point, means I will say crux of whatever I have discussed. Now coming to step number 2. Step number 2 means what? Now we'll make due our purchase consideration, because some amount is now receivable from transferring company for the assets and liability which are taken over. to make due PC from the transferring company for the assets and liability taken over. Because can you say all the assets and liability are transferred to realization account, therefore this due entry will be done also through realization account, correct? So our journal entry will be what? Amount receivable from transferring company, so we'll say transferring company account debit, because some amount is receivable from transferring company. So transferring company account debit to realization account with the amount of PC, with the amount of PC. This PC can be calculated either by using net payment method or net asset method. Already we discussed this point. So first of course we'll do calculation of PC, then only we can come to what? Step number 2. So this journal entry will be done by the amount of PC. PC will be calculated as per working note. So transferring company account debit to realization account. Understood? Now step number 3, what happened? There are some assets or liability which might not be taken over by transferring company. So if there are some assets or liability which are not taken over by transferring company, so can that asset will be sold separately and liability will be settled separately. So for realization of such asset which are not taken over by transferring company, what journal entry? So journal entry will be cash or bank to realization account. Cash or bank to realization account. Why through realization? Because why through realization account? Because all asset has been already closed by transfer to realization account. Now whatever cash you are receiving, whatever cash you are paying, that will be through realization account. So cash account debit to realization account. For payment of such liability, realization account debit to cash or bank. Realization account debit to cash or bank. Understood? So for sale of such asset, what journal entry? Cash or bank to realization account. For payment of such liabilities, what? बताओ, realization account debit to cash or bank. If suppose question is silent about such liability, means question has not given any information about liability, that liability is paid or not paid, so always we'll assume that such liability is already paid at book value. Then we'll assume that such liability which is not taken over by transferring company is actually settled at book value. So if question is silent about payment of such liability, it will be always assume that such liability will be settled at book value. Understood? Have you understood this point? Batao. This much you understood. Now for settlement of contingent liability, sometimes what happens, contingent liability also requires settlement. Now contingent liability requires settlement, means there is a contingent liability, so of course it may require settlement. So there can be two situations. If it is cancelled, then no journal entry. If it is cancelled, then no journal entry. But if it is paid, so whatever payment you have done, that is a loss, and loss will be debited to realization account. So realization account debit to cash or bank. Realization account debit to cash or bank. So whatever you are paying for the settlement of contingent liability, of course that is a loss, and loss will be debited to which account? Realization account. So realization account debit to cash or bank. Understood? Correct. So this was step number 3. Step number 3 you have understood. Now step number 4 is what? For payment of liquidation expense or realization expense of transfer company. So payment of liquidation expense or realization expense of transfer company. So if paid by transfer company, once again whatever payment has been done, that is a expense or loss, that will be also debited to realization account. So once again the journal entry is realization account debit to cash or bank. Realization account debit to cash or bank. Understood? Correct. So if the liquidation expense are paid by transfer company, if the liquidation expense are paid by transfer company, what journal entry bolo? If the liquidation expense are paid by transfer company, realization account debit to cash or bank. But sometime what happen, as per the information given the question, liquidation expense of transfer company will be either reimbursed or paid by transferring company. Will be either reimbursed or paid by transferring company. So if paid by transferring company, then no journal entry in the books of transfer company, therefore no journal entry in the books of transfer company. But if it is reimbursed by transfer company, reimbursed means what? First transfer company will pay, and then they will that amount will be reimbursed by transfer company. So first payment journal entry, and then recovery journal entry. The payment journal entry, realization account debit to cash or bank. Recovery journal entry, cash and bank to realization account. So payment, realization account debit to cash or bank. Reimbursement, cash or bank to realization account. Suppose the payment has been done 1 lakh, but recovery is only 80,000. So automatically the loss of 20,000 will be debited to realization account, because whatever not reimbursed, that becomes the loss of transfer company. Understood? So realization account debit to cash or bank for payment. For recovery or reimbursement, cash or bank to realization account. Understood? So I hope you have understood step number 4 for payment of liquidation expense or realization expenses. Now, sometimes question is silent. Question is silent about liquidation expense. Question has given nothing. They say liquidation expense 10,000 and nothing has been given whether it is paid by transfer company or it is paid by transfer company. In that case, we will take some assumption. So, what is the assumption? If the cash and bank, if the entire cash and bank is taken over by transfer company. Now, you only say if the entire cash and bank is taken over by transfer company, whether transfer company can pay the amount. No. So in that case, we'll assume that realization expense or liquidation expense will be paid by transfer company. But if the cash and bank is not taken over by, if the cash and bank is not taken over by transfer company, it means it is paid by transfer company. So this is the general assumption we are supposed to take from exam point of view. So if the cash and bank is taken over by transfer company, then it will be assumed that liquidation expense are paid by transfer company. If the cash and bank is not taken over by transfer company, then it will be assumed that liquidation expense are paid by transfer company. Understood this point? Correct. So this was step number 4. Can you repeat with me once again? Step number 1 is what? First step is what? Close all item of balance sheet at book value by transferring it to respective account. Step number 1, miscale the balance sheet at book value. Second step, make PC due for assets and liability taken over by transfer company. So we should make PC due for the assets and liability taken over by transfer company. Third step, can I say we need to realize or settle the liability which are not taken over by transfer company. Means for assets and liability which are not taken over by transfer company, we need to pass journal entry. Fourth step, we need to do journal entry for payment of liquidation or realization expense. Payment of liquidation or realization expenses. Step number 5 is what? Now we receive PC from the transfer company. Now can I say whatever PC was due in step number 2 will be realized? Correct? Will be realized from whom? Will be realized from transfer company. So whatever receive, can I say PC can be received in the form of cash? It can be received in the form of equity shares of transfer company. It can be received in the form of preference shares of transfer company. It can be received in the form of debentures of transfer company as per the working note of PC. Means this will be understood from the working note of PC. The PC has been discharged in which mode? Correct. So whatever mode we receive, cash account debit, equity shares in transfer company account debit, preference shares in transfer company account debit, debentures in transfer company account debit to what? Transfer company. Can you say with this journal entry, transfer company account will be automatically closed? Transfer company account will be automatically closed. So with this journal entry, transfer company account will be automatically closed. Understood? Chalega? This much? Then step number 6 is what? Payment of PC to preference holders. Now we'll make payment of PC to preference holders as per the working note of PC. So whatever you are paying, so journal into what? Preference holders account debit to cash or to preference shares in transfer company, or whatever you are paying that will be credited. Correct now. So preference holders account debit to preference shares in transfer company account to cash or bank, whatever is paid. Correct. So this journal entry will be done. And can I say any difference in the preference holders account will be profit or loss on payment to preference holders? So that will be profit or loss on payment to preference holders. That profit or loss will be transferred to what? Realization account. So if profit, journal entry what? Preference holders account debit to realization account. Realization account will be created. If loss, realization account will be debited. Realization account debit to preference holders account. So for profit or loss means if you are making less payment to preference holders, that is a profit for the company. If you are making more payment to preference holders, that is loss for the company. So that profit or loss on payment to preference holders will be transferred to realization account, and with this preference holders account will be closed. With this preference holders account will be closed. So step number 6 you understood for payment of PC to preference holders. Now we'll do for payment of PC to equity shareholders. For payment of PC to equity shareholders as per the working note of PC means whatever is paid to equity shareholders as per the information given the question, means whatever we have done in our PC calculation that will be done. Means what will do? Equity shareholders account debit to cash or bank, to equity shares in transfer company, or to preference shares in transfer company, or to debentures in transfer company as per the information given in the question. Whatever is given that we write down. Correct? Understood? Then we'll close realization account. And determine profit or loss on realization and transfer the same to equity shareholders account. Then at the end what we'll do, we'll close realization account. Now realization account may have balance in debit side or may have balance in credit side. Correct now? Understood? So if they have balance in debit side, so it means that is a profit. That profit will be transferred to equity shareholders account. So realization account debit to equity shareholders account. Correct now? Understood? Correct. So if profit on realization, what journal entry? Realization account debit to equity shareholders account. If there is a loss on realization, then equity shareholders account debit to realization account. Means this is the gain or loss of what? Equity shareholders, gain or loss of equity shareholders. Understood? Correct. So if profit on realization, what journal entry? Realization account debit to equity shareholders account. If loss, so equity shareholders account debit to realization account. This journal entry we will do. Have you understood this point? Bolo. Any doubt? Bole. Step number 8 also you have understood. Step number 8 also you have understood. Correct. Now step number 9, last step, close cash and bank account. This step will only be applicable if the cash and bank account is not taken over and you are preparing cash and bank account separately. So if you are preparing cash and bank account separately, so can you say there may be some surplus balance in cash and bank. So that surplus balance belong to equity shareholders. So at the end you will need to close cash and bank account. Also what journal entry will do? For surplus balance, equities that will be transferred to equity shareholders account. So we'll say equity shareholders account debit to cash or bank. Equity shareholders account debit to cash or bank. Means cash and bank left after a discharge of all outside liability and the claim of preference shareholders belong to equity shareholders account. Correct. So this will be our implied journal entry. If the cash and bank is not taken over, if the cash and bank is not taken over, so whatever surplus left in cash and bank account after payment of all the liability will belong to equity shareholders account, and one journal entry will do equity shareholders account debit to cash or bank account. This become 9 step for closing the books of account of transfer company. So can you repeat with me one by one? Can you repeat with me one by one? Bolo. First is what? Step number 1 is what? Once again starting से करेंगे. Step number 1 is what? Kill the balance sheet at book value. In simple word, we'll say kill the balance sheet at book value. But all asset will be transferred to realization account. All asset will include goodwill, intangible asset, correct? Cash and bank, if taken over, will be transferred to realization account. If not taken over, will not be transferred to realization account. Then open separate cash and bank account. But other asset, other liability, even though not taken over, will be always transferred to realization account. Chalega? However, there are some fictitious assets. Fictitious assets are not a real asset, that are accumulated losses. That loss will be transferred to equity shareholders account, not realization account. Understood? Yes, sir. Then all liability will be transferred to realization account. Preference share capital will be transferred to preference shareholders account. Equity share capital reserve and surplus will be transferred to equity shareholders account. Fictitious assets will be transferred to equity shareholders account. Then step number 2 is what? Make due PC for the assets and liability taken over by transferee company. What journal entry? Transferee company account debit to realization account with the amount of PC. Then realize the asset and pay off the liability for the assets and liability not taken over by transferee company. For asset, what journal entry? Cash and bank to realization account. For liability, realization account debit to cash and bank. But there may be some contingent liability. If paid, then journal entry is realization account debit to cash or bank. If not paid, means cancelled, then no journal entry. However, if the question is silent about liability, then we'll always assume that they are paid at book value. They are paid at book value. Liability means I am saying about recorded liability, not contingent liability, correct? So if the question is silent about payment of such liability, it will be assumed that the liability is settled at book value. Then for payment of liquidation expense, if paid by transfer company, then realization account debit to cash or bank. If paid by transfer company, then no journal entry. If reimbursed by transfer company, then first payment, journal entry, realization account debit to cash or bank. Then recovery means reimbursement, cash and bank to realization account. Then for receiving PC from transferee company, as per the working order, PC will do cash account debit, preference shares in transferee company account debit, equity shares in transferee company account debit, debentures in transferee company to transferee company. With this transferee company account will be closed, correct? Then we'll do payment of purchase consideration to preference shareholders as per the information given. The question is as per the working note of PC. What journal entry? Preference shareholders account debit to preference shares in transferee company account to cash or bank or whatever paid, correct? Understood? Now because of this payment, there may be some profit to preference shareholders. I am saying profit to preference shareholders. This if profit to whom? Preference shareholders, correct? मीन्स प्रॉफिट टू प्रेफरेंस होल्डर्स इज अ लॉस टू कंपनी, करेक्ट ना, ये थोड़ा अलग समझना, मीन्स डोंट बी कंफ्यूज, इफ लॉस टू प्रेफरेंस होल्डर्स, करेक्ट. So if profit to preference holders, are you getting what I am saying? If profit to preference holders, are you getting what I am saying? Bolo. Then journal entry is preference holders account debit to realization. If loss to preference holders, अच्छा, this is sorry, my mistake. चलो ऐसा नहीं है, my mistake. If profit, this is profit to what? Company only. Profit means lie down. Yeah, confused जाओगे. Profit means what? Less payment to preference holders. Loss means what? More payment to preference holders. No, it is correct. Okay, then it is what? Preference holders account debit to realization account. Here loss is what? Loss will be debited to realization account debit to preference holders account. Then for payment of PC to equity shareholders, same thing, whatever equity shareholders account debit to equity share, preference share, cash or bank. Then close realization account. If profit, then journal entry is what? Realization account debit to equity shareholders account. If loss, then equity shareholders account debit to realization account. Close cash and bank account. If surplus balance, equity shareholders account debit to cash or bank. I hope you have understood. Now let me take one question to explain this. Can we take one question? But before that, I'll just give you a format. Right on. Whenever you are preparing a realization account, suppose you are preparing a realization account, because normally in exam they will ask you what? Account. So what will come? I am just writing. Right on. Realization account. तो कहने से यहां पर to all asset will come, add book value, by all liabilities will come, add book value. This asset will include goodwill, asset will include goodwill at book value, not at fair value. Goodwill if it's coming in the balance sheet, understood. All other intangible asset also. Okay, understood. And cash and bank will also come if taken over by transfer company. If taken over by transfer company, if not taken over, it will not come. Okay, this liability will include debentures and provisions. Understood? Correct? Yes, sir. Then we write on by transferee company. This with the amount of PC. With the amount of PC. This is step number 1. I'm just writing step number 1 also. This is step number 1. This is step number 1. This is step number 2. Chalega? Correct. Then any asset is which is not taken over will be realized. We write on by cash and bank. Asset not taken over will be sold. This is step number 3. This is, can I say, realizable value. Realizable value at whatever amount realized. And we write on 2, cash or bank for liability settled, liability not taken over. This is nothing but settlement value, means amount what is paid, payable, amount paid. Are you getting? So this is step number 3. This is step number 3. Have you understood this point? Correct? Understood. Then there is a realization expense. So 2, cash or bank Can you say realization expense paid by transfer company will come, paid by transfer company. If paid by transfer company will not come, if reimbursed, so it will come in both side, payment and then reimbursement, correct. So realization expense paid, this step number 4. And by cash or bank, realization expense recovered, reimbursed, realization expense reimbursed if any. Are you able to understand these all points? This is also step number 4. Chalega. Got this point? Then can you say, then when you close preference holders account, there can be some more payment to preference holders. If normally we do more payment, so we write on two preference holders. Two preference holders means we have done more payment to preference holders, that will be transferred to what? Realization account. Then we have done general entry realization account debit to preference holders account, correct? Yes sir. So this is actually step number, what is the step number? 7, I think so. Step number 7 na? Step number 6. Step number 6, correct. Then we'll close realization account and the realization profit will be transferred to equity shareholders. This is realization profit. This is step number 8. Or there is a realization loss, that is also transferred to equity shareholders. This realization loss, this is step number 8. This account will be closed. Have you understood? Realization account. Realization account you understood? On this much, any question you do, this only will come, nothing more than this. Then we'll prepare one equity shareholders account. Equity shareholders account. So we write down by equity share capital at book value, by reserve and surplus at book value. So this reserve and surplus will be all types of reserve and surplus, correct? And to any fictitious asset, if there is any fictitious asset, that will be closed by transfer to equity shareholders account book value, correct? Now we'll do the payment to preference holders. So whatever payment done, correct, so it can be cash or bank, or it can be equity shares of transferee company, or it can be debentures of transferee company as per whatever information given in the question. So this is nothing but PC transferred means PC payable to equity shareholders. Understood now? The difference of this account will be realization profit or loss, means this amount 8 equity shareholder realization profit. So we write down 2 equity shareholders if there is a realization loss, correct. And we write down by equity by realization account, 2 realization account write down, sorry my mistake, 2 realization account and by realization account. This is realization profit. This is the balancing figure actually. This is nothing but step number 8. Step number 8. This is step number 1. This is step number 1. And this is payment to equity shareholders. This is step number 7. Step number 7. Are you getting what I am saying? Then we write down preference shareholders account. Preference shareholders account. This all account you need to prepare. Yes, I understand. This is no doubt, but I am explaining you. Either this is helpful or not. This account, when I am preparing, you are getting more clarity, correct? When I am preparing this account, you are getting more clarity. Means any question can be done with this, whatever I am saying. So we write down buy preference share capital at book value. This is step number 1, correct? Then we'll do payment. So it can be to cash or bank, to preference shares of transferee company. This is as per, this is nothing but PC payable to preference holder. This is step number 7, step number 7. Then whatever is the difference will be transferred to realization account. Realization account, correct now? So actually the difference in this case will come in that side. Normally it will come in that side, so I am writing that side only. So difference will be transferred to realization account. Means you have made more payment to preference holders. Normally in question it will be more payment. Written by realization account. This is also nothing but step number 7. Correct. This is the balancing figure and this will be step number 7. Step number 7. You can see this has been transferred to what? Realization account. This account. So this is step number 6. My mistake. It is step number 6. Step number 6 is step number 6. Chalega? Understood. Then you need to also prepare one transferee company account. Transferee company account. Normally these are the account which we need to prepare. So first we write down to realization with the amount of PC. This is step number 2. Step number 2 means this is nothing but this account. This you written यहाँ पर by transferee company PC. So that will come as a second effect. Understood. Then we write down whatever we have received by cash, by equity shares of transferee company, by preference shares of transferee company, by debentures of transferee company. This is nothing but step number 6. Step number 6 means realization of PC from what? Transferee company, and this account will be closed. This account will be closed. Understood? Yes sir. Then we need to also prepare one cash and bank account if not taken over by transferee company. So we will prepare cash and bank account if not taken over by transferee company. So we write down to balance brought down. This will be book value, correct? Then any sale of asset, we write down to realization. Asset not taken over will be sold. This is step number 3. This is realizable value. Step number 3. Liability not taken over will be paid. So by realization, liability will be paid. This is amount paid. This is also what? Step number 3. Then realization expense paid. So by realization expense paid. This is also paid. So step number 4. And if recovery, then we write down यहाँ पर to realization. Realization expense recovered. If recovered, so this is step number 4. And any balance of this account after payment to everyone, correct now, will be transferred to equity shareholders account. So this account will be closed by transfer to equity shareholders account. This is known as surplus. If this is surplus, the surplus will be closed by transfer to what? This. Have you understood this point? Correct. So this all summary I have given. Summary, have you understood? Have you understood the summary part? Well, now we can take one question, if you permit. Can we take the question? I think this ledger account will give you some idea about how to prepare what, how to close the books of account when if they ask ledger account. Normally in exam they ask account. Normally in exam they ask accounts. Yes, sir. Chalo, we'll take one question. Come to question 15 of the expected question. With the first question given, this is a question 15 of my question bank. The balance sheet of Mars Limited as on 31st March 2011 was as follow. You can see they are given share capital 10 lakh, equity shares, reserve and surplus, capital reserve, contingency reserve, profit and loss account, then bill payable, sundry creditor, provision for income tax, then fixed asset they have given land and building 7,64,000, then stock 7,75,000, debtor 1,60,000 and provision for doubtful debt 8,000. Correct. This is net amount. The gross amount is 1,60,000. Bills receivable, cash at bank. On 1st April 2011, Jupiter Limited agreed to absorb Mars Limited on the following terms and conditions. Jupiter Limited will take over the assets at the following value. The land and building is taken over at 10,80,000. Stock is taken over at 7,70,000 and BR is taken over at 30,000. Purchase consideration will be settled by Jupiter Limited as under 4,100 fully paid 10% preference shares of rupees 100 each will be issued and the balance will be settled by issuing equity shares of rupees 10 each at rupees 8 paid up. Correct. Means one thing is clear that all assets are not taken over. Only 3 assets are taken over. Liquidation expenses are to be reimbursed by Jupiter Limited to the extent of rupees 5,000. Sunny debtor realized 1,50,000 because that was not taken over, therefore realizable value given. Bills payable were settled at rupees 38,000 because that was not paid, therefore what? Therefore payable value is given. Income tax authority fixed the taxation liability at rupees 2,12,000 and the same was paid Understood? And the same was paid. So income tax was settled at rupees 2,12,000 to 22,000. Creditor were finally settled with the cash remaining after meeting liquidation expense of rupees 8,000. After meeting liquidation expense, so liquidation expense paid is 8,000 and reimbursed is 5,000. Correct? Paid is 8,000, reimbursed is 5,000 and creditor were finally settled with the cash remaining. Means whatever cash and bank balance will be left, that will be used for the payment of creditor. You are required to calculate the number of equity shares and preference shares to be allotted by Jupiter Limited in discharge of PC. Means first the calculation PC and prepare realization account, bank account, equity shareholders account and Jupiter Limited account in the books of Mars Limited. Means we will close the books of which limited? Mars Limited. Correct. Now first you need to say me in this PC will be calculated by using which method? Net payment method or net asset method? Only this is the area where student can do mistake. Batao. You only say everyone net asset method ki net payment method. You can see point number 1 and point number 2 are the information given for PC. So first you need to say me will calculate PC by using net asset method or net payment method. Batao. So first we are doing calculation of PC. Calculation of PC. But I will use net payment. So whenever the question asks now, just identify this. Whether number of shares to be issued is given. पहले check करो. Number of shares to be issued is given to equity shareholders. So what they have given? 4,400 fully paid 10% preference share will be issued. So can you say for preference shares, how many preference shares will be issued, that is given, and the balance will be settled by issuing equity shares, but they have not given ki how many will be number of equity shares to be issued. So it means can I say number of equity shares to be issued is not given, not given. Whether swap ratio is given, not given, swap ratio is not given. Whether fair value of shares of both the companies are given, fair value of shares of both the company, because we want both the company. So fair value of the shares of both the companies are given, not given. And whether question has asked you to calculate intrinsic value, whether question, no, not asked, it means we'll use what? Net asset method. We'll use net asset method. However, I am just giving one hint. Whenever questions say in this way, ki balance will be settled, balance, it means it is what? Net asset method. This is one hint. Then also I will say cross check all these points. Net asset method. Whenever they say balance will be settled, it means payment information has not been given. Whenever payment information is not given, it means use what? Net asset method. Chalega? Understood? So what is not given? Number of shares to be issued is not given. Swap ratio is not given. Fair value of shares of both companies are not given. And intrinsic value calculation, whether we need to calculate intrinsic value, that is also not given. Correct? It means we'll use what? Net asset method. Net asset method means what? All the assets will have been taken over. So only 3 assets are taken over. Land and building 10,80,000. So you write down land and building. So I have the solution. I will do from solution only why I am doing. So I have the solution. I will explain from that. Chalega. So you can see calculation of PC by using net asset method. So land and building 10,80,000. Stock 7,70,000. Bills receivable 30,000. This become total PC. Total PC. Now can I say mode of payment? We need to find out the first payment. First we'll find, write down what? Okay, this is total PC. So what is the payment to equity shareholders in 10% preference shares? So payment to equity shareholders in 10% preference share, it is given that they will be issued 4,100 shares will be issued. Preference shares will be issued at par. If nothing is given, then at par now. So they have given what? Keep 4,100 fully paid 10% preference share of rupees 100 each will be issued. They have not given issue price. So whenever issue price not given, we'll assume it will be issued at par. Issue price means they should give at rupees not given. So at rupees not given means we'll assume that will be issued at par. Understood? So 4,100 into 100, it become 4,10,000. So it become 4,10,000. So out of these, how much preference share issued? 4,10,000. So balance will be what? The equities amount of equity shares issued. Amount of equity shares issued. Now what they have said, the balance will be settled by issuing equity shares of rupees 10 is rupees 8 paid up, means partly paid up. So if you want number of equity shares, you will divide by 8. Number of equity shares will be 4,70,000 divided by 8. So 4,70,000 divided by 8 means 1,83,750 equity shares will be issued, which will be issued at rupees 8. So that will become 14,70,000. 14,70,000. Understood? Means 18,80,000 will be discharged in preference shares of rupees 4,10,000, in equity shares of rupees 14,70,000. Understood? Now we'll come to the books of Mars Limited. Books of Mars Limited. So can I say first we'll close the balance sheet item. Balance sheet item. So let us do. So let us close it. So my question, land and building will be transferred to which account? Realization account. At what value? 7,64,000. Stock will be transferred to realization account. Sundry debtor will be transferred to realization account at 1,60,000. This provision will be transferred to realization account at 8,000. This bills receivable will be transferred to realization account at 30,000. This cash at bank will not be transferred to realization account because not taken over. So for this we will prepare one cash and bank account. This equity share capital will be transferred to equity shareholders account. This capital reserve, this contingency reserve, this PL account, all will be transferred to equity shareholders account. Bills payable, sundry creditor and income tax, this all three will be transferred to realization account at book value. So first to kill the balance sheet. First all item of the balance sheet need to be closed. This is the most important step, most important steps, correct? You can see I have done that only. So you can see two asset, land and building, stock, debtor, BR at book value. By liability, bills payable, sundry creditor, provision for tax, provision for doubtful debt. Provision for doubtful debt. Understood? Correct, that was deducted from debtor, but that will be, that is one type of having a credit balance, correct? Understood. Step number 1 completed. Now what is step number 2? Will make PC due from transferee company. So what journal entry will do? Transferee company account debit to realization account. Transferee company to realization account means Jupiter Limited company to what? Realization account. We done by Jupiter Limited with the amount of PC. With the amount of PC. This will do by Jupiter Limited. And can I say for this second effect will go to what? Jupiter Limited account. So you can see we have opened Jupiter Limited account and we have written two realization account also. Acha, we'll also open one cash and bank account that I have forgotten to say. Cash and bank account will be open and the opening balance of cash and bank account will be the book value 3,29,000. Understood? Step number 1 done. Step number 2 done. Let us come to step number 3. Now all the assets and liability which are not taken over will be realized and all the liability will be settled. So let us come to, can you see this bills payable, sundry creditor and provision for tax is not taken over, that will be settled. So by two cash of bank, bill payable they have given the question will be settled at rupees 38,000. Bills payable will be settled at rupees 38,000. Provision for tax will be to be written two cash of bank. Provision for tax will be settled at 2,22,000. Correct. And for creditor, can I say we need to wait because the closing balance of cash and bank account will be the amount to be settled for creditor. We need to prepare cash and bank account for that. Chalega na? Correct. Understood. So creditor, this will be amount coming from cash and bank account. So we need to wait for this. And can I say land and building is taken over, stock is taken over, debtor is taken over, but BR is not taken over. So BR will be right. So cash and bank debtor 1,50,000. It was realized at 1,50,000. Understood. Now there was a liquidation expense paid was 8,000, reimbursed was 5,000. So you can see we have written two cash and bank realized expense paid how much? 8,000, recovered how much? 5,000. Recovered how much? 5,000. Now you can also close cash and bank account also. So cash and bank account by realization all the liability and the payment to realization debtor and realization expense recovered will come and the balancing figure of this account will be the payment to creditor. Payment to creditor, that is 2,16,000 because of the information given the question. So in this whatever surplus coming in cash and bank account that will be used for the payment of creditor, so that will go to 2,16,000 and we have written 2,16,000 as per cash and bank account, as per cash and bank account. Understood this point? Correct. Now step number 3 also done. Let us come to step number 4. Step number 4 is what? Receive PC. Can I say liquidation expense? Step number 4 was liquidation expense. Step number 5 was we receive PC from transferee company. So we write on transferee company में can I say buy preference shares of Jupiter Limited 4,10,000, buy equity shares of Jupiter Limited 14,70,000. So this account will be closed. Then we'll make payment to preference shareholders, but in this there is no preference shareholders, only equity shareholders. So this will be transferred to equity shareholders account and you can see in equity shareholders account we have written two preference shares of Jupiter Limited and two equity shares of Jupiter Limited. Then last step is what? Close realization account, because cash and bank account is already closed. So close realization account, any difference will be what? The profit or loss. If it is coming, this become realization profit and this realization profit will be transferred to equity shareholders account and this equity shareholders account will be automatically closed. This is what? The sum total of all the steps. Sum total of all the steps. Understood? बताइए. Have you understood this much? Any doubt? So we have done the PC calculation, PC revision done, and we have also done what? The transfer company. Transfer company will not do right now. Transfer company will do in some other video. Can I say transfer company you have understood? Transfer company you have understood and transferee company is pending. So transferee company will do in some other video. I hope you have understood this much. So this will be done in two parts. I think we will do much now, so you will be confused. I think once you revise by your own, then we'll come to transferee company. Okay, sir. So for transferee company, I'll come with another video. Chalega? Okay, sir. Okay. Any doubt you can ask me. I'm waiting for 1 or 2 minutes. If you have any question, you can ask me. Okay, done. So we'll have another video, another part of amalgamation chapter in which we'll discuss transferee company. Okay, sir. Thank you very much.